Hey everyone, welcome to my YouTube channel. Dave Ganderls here. It's the 24th of May. Putting together another video for you guys. Before we get started, this channel is focused on ways to generate streams of income. So if you're interested in developing ways to create some wealth and have your money work for you while you sleep, please consider subscribing to my channel, clicking the little bell. Again, when we hit 2,000 subscribers, we're going to be doing a crypto coin giveaway. So let's build up the channel. Let's share this with others. Let's get some other people involved with the little community we have here. And again, when we hit 2,000 subscribers, there'll be a free crypto giveaway. So in the video description, underneath the video, you'll find a bunch of information. The most important thing a lot of people have requested are timestamps. So you'll see that I typically put some timestamps here so that you could jump ahead, jump back, and go to a specific topic of interest to you. So please look under the video for that. There's also a list of things that I'd like some feedback from you on what you'd like to see videos made of. So please comment in the comment section what you want to hear me talk about and share with you. Again, this channel is for you guys, so whatever you're interested in is what I want to try and share with you. So again, please take the time to comment, like, and share the video so that we can get higher up on the YouTube channel, grow the channel, get to that 2,000 mark, and we'll have a giveaway. There's other things I'm involved in that are generating streams of income for me. So if you're interested in looking at some of this stuff, there'll be links here to go and do that. And then also look at my YouTube channel. There'll be videos about these opportunities. So you can get some more information by looking at some of the other videos on my channel. There's ways to contact me. I'm on various social media sites. I do have a private channel that we have established for the Safe Invest Fund opportunity. So if you're interested, and also the Forex trading stuff, if you're interested, here's a link right here. You could join my Telegram group and discuss the opportunity with me and get some more information. What else? Most importantly, again, listen guys, I'm just a guy on YouTube. I'm not a financial advisor, so what I'm sharing here are my thoughts, my opinions, my ideas. If you need financial advice, you must find a certified financial advisor. Again, you got to do your own research. I'm providing you information. I'm sharing information on what I'm doing. What I'm doing may not be right for you, or it might be, but you guys got to decide for yourself what's best for you, right? So take what I say, follow some other people, come up with some ideas for yourself, and decide for yourself what's good for you and what your risk tolerance is. So again, I'm not trying to portray myself here as a financial advisor. If I slip up and say you should do this, you should do that, that's just me speaking out loud about myself, really. And this really should be considered educational. I'm trying to show you ways to create the skill set of technical analysis and reading charts, and just kind of giving you guys a way to grow as a person to start doing some of this stuff for yourself. All right, so again, as well, depending on what I'm talking about in this video, there'll be other listed videos here that are about the same topic. So just look in the video description. You might see some other videos related to the same topic of interest that I'm talking about. And it'll be an easy way for you to go and find that within my channel instead of looking at all the video titles. I usually try to put the same type of video links in the video description if there's enough room to do so. And then finally, there's some keywords down here that help people find the video in YouTube, and just kind of keyword searches. So with that being said, that's the introduction. Again, most importantly, look for the timestamps. If you have time limitations, or you don't want to watch the whole video, you could jump ahead to whatever interesting in the video for you. All right, so let's get in. We're gonna talk about some cryptos today. It's been a bloodbath the last couple, basically a week or two. I pretty much cleaned and got rid of everything on my charts since I haven't put out a video in a while. With the chaotic manipulation and things, there was no true technical analysis that could be done. So there was no reason for me to put out videos until this craziness settled down a little bit. So I went ahead and saved some time by just doing the cleanup before the video, and I put some interesting levels here. So we'll go through each one of these. I'll give you my opinions on where things are and where things are going, and then you could decide what's good for you and what's not for you, and you could practice repeating what I have here on your own charts. So let's start with ADA. So ADA, was doing very well. It actually hit our targets on what we had up here earlier and came back down. Most recently, because of this manipulation, I just cleaned everything up and kind of figured out what's what right now and put some stuff on the chart here. So, what you really want to get used to doing is multi-time time frame analysis. You really want to take a zoom out. You want to see what's happening on the larger scale. Even with this manipulation, you could see very clearly here, other than this crazy wick right here that was back in February, we've been on a tear. I mean, we went from like 20 cents below to like 10 cents all the way up to almost $2. Past $2, actually. $2.46. So even though we went down 50% within the last week, you guys got to like take a step back and realize like we've been on a crazy run. This little bit of a pullback and relaxation is not a bad thing. You could see here we were doing some consolidation over a couple days and weeks within these ranges, and then it pumped up and it came down, and you could kind of see that it got supported even with this dump at these higher time frame ranges right here. Like there was a range here, now it came down, it wicked, but it still stayed above here. So this created a nice base for the price. So anytime the price comes down to these levels, in my opinion, for me, it's certainly a great opportunity to cost average in. Cost averaging in, you're really not trying to time the market. You're just setting a plan to buy so much either every week, every 2 weeks, every 3 weeks, every month, whatever you decide to do. You have a set amount of money that you want to buy, and you buy whatever the price is. Sometimes you get more, sometimes you get less, but overall you're going to be building a nice averaged position into this crypto, and that's for a longer term play, and that's basically what I do. I'm sharing like more recent and more short term things for those that are trading. I do trade a little bit, but for the most part I'm just dollar cost averaging in and dollar cost averaging out of my positions in the longer term. But I do have some money set aside for getting in and getting out at like 1x, 2x, and just doing some trading with some of the money. But most of my holds are for longer term, so I don't really worry about the noise. Again, like I said, if you're getting concerned, you're new to the market, just remember that these pullbacks are normal. It happens. The most important thing you can do is just realize, like, did something change fundamentally? If it didn't change fundamentally, this is all manipulation. And if you have money on the side, those dips and those crazy pullbacks are prime opportunities for you to kind of dip your toes in and buy a little bit. Maybe it goes down a little bit more, you buy a little bit more. You never want to buy everything at one time. My rule of thumb is buy 20% of what you're planning on buying. Do five buys or 5 sells, or if you're going short. Don't buy everything at one shot. Just average your position in, even on a trading account. You should dollar cost average into your position when certain levels are hit. So you can see here when we start getting into the lower time frames, the 4 hour, there's some interesting zones. These are basically what I've been drawing in the past. These could be zones of interest, such as buys and sell support and resistance areas. So let me just make this visibility. Let's see here. Let's do background to green, I guess. Let's see, what color green? I guess that's good. We can make this a little bit more pronounced. So there's going to be resistance areas and support areas. I'm just picking green right now, but you can see here there's a zone here. If you come here and you kind of copy that there, and then you could copy that. You can copy it again down here. These are all zones. These are not specific levels. So these are just areas of interest that you should be watching if price comes to for trades. So right now we're at this level right here. You know, if you could see here, this is a little bit of a W, although it's facing downward, which is less promising for a double bottom, but still we're pushing up at this level here, and if it breaks through here, there's this pattern here that kind of says this pattern will complete if the price comes here. So if the price breaks out above here, you could play a trade up to this level, and unfortunately this right now is a bullish pattern until it gets finished, right? So once it hits the D, there's a higher probability that it's going to come back down. So you can wait for the breakout and buy the D and then sell, and then wait for the pullback and then, you know, get back in on the pullback, or, you know, just wait for it to hit the D and come back down and maybe check this level. Maybe it'll do something, you know, along these lines. And maybe it'll come up here and then come back down here and then start going back up, right? So again, there's no definite pattern here to play. Right now, you could just play price action and support and resistance lines. So right now, if you're doing, you know, if you're looking to short, you wait for this to pull away from this as resistance, and then you could play the downside. You know, you could do the same thing I just showed you up here. You could wait for this to come down here, come up here, and then come back down here. You know, that's the downside play. And if it breaks above here, then you could wait for it to come back, check, and then maybe go higher. And nothing's saying it's going to stop at D. I mean, you know, the next resistance level is over here, you know, up here. So, you know, you could consider scaling out some at D and then scaling out some at this higher level in your trade upward on your long trade if you decide to buy. In your short trade, you know, if it bounces off here and starts coming down again, then this should be your target to get out of your short. So that's really all I see for ADA right now. Again, we're kind of licking our wounds and kind of letting the charts settle out a little bit after this mass manipulation that's been going on for the last week. So all you really can do is play support and resistance. This is a pattern that might show up. You know, like I said, the price action, it might come up to here and then start coming back down, or it might go all the way up to there. You know, this D is the official production of this pattern. So right now this pattern is not completed until price hits the D. And like I said, it doesn't mean that has to stop there. This price, you know, could go up to either X or it could come up to here, and then this D will just move up a little bit, right? This is a live pattern that's moving depending on where price goes, and then there's a certain level. If it goes above the X, I believe this pattern will just be negated and it won't work. But this is not a set in stone level for D. This is just an anticipated level. So if it hits D and starts turning around, then this is complete. But if it goes up a little bit, this D is just going to follow the price higher. So anywhere between this level where D is now and this resistance level up here would be where you would get out of your long trade or partials, right? So maybe you take 50% profit here, and then you move your stop loss up in the money, and then you let the rest ride, and then, you know, realize that it can be coming back down. It could come down to this level, it could come down to this level. So you got to just kind of, you know, play it by ear, see what's happening. You don't want to, you're setting a trap and you're waiting for things to happen. You're not guessing of what's happening. You're going to take action once it actually happens. Either it's going to break up and check and you take the trade, or it's going to bounce down, double check again and come back down longer, and then you're going to take the short trade. So that's how I would play this right now with the patterns. There's nothing other than this going on right now for ADA. Everything seems to be rebounding very nicely, so I anticipate this going back up, but you never know. And like I just mentioned, you got to play the trade. Either it breaks up and comes back and checks, you take the long, or it breaks down, checks, and you take the short. All right, on to the next thing. Bitcoin. All right, so I did the same thing with Bitcoin. I put on some levels that I've determined over the different time frames. You know, you start at the daily, right? You pull it back out, and you just got to see. I mean, even though everything has been shitty for the last couple of days to the week, and we've come down a lot. I mean, you got to still think, like, look how far up we are. Like, if you really look at this to here, I mean, we basically touched the 618 from this run. So this is a typical pullback. I mean, it's horrible when you look at your accounts and you're down 50%, but this is not out of the ordinary. I mean, look, it touched the 618, the 618 and the 65 almost perfectly. It split the difference right in the middle. So this is not something to be scared about. You just gotta be able to stomach it. And the problem is, too many people over leverage their trades and their accounts get blown because they over leverage. So again, I talk about it all the time, but risk management is the most important thing you can do for yourself. Get that in your mind, stick to it, come up with a trading plan, know when you're getting in, know when you're getting out. Don't change, don't get greedy, don't try to squeak out an extra dollar. In the long term, if this is truly trading, but if this is your trading account, just stick with your guns, stick with your plan, and just don't double guess, don't get greedy. There's always going to be another trade. So just that's just my thoughts for you as a trader, to kind of get the emotions out, set a plan, and stick to it. Stick to it, and don't worry about things that go wrong. As long as you did everything that you said you wanted to do, and your requirements to get in a trade was met, and your requirements to get out of the trade was met, things happen. Manipulation happens. It's out of our control. We can't control it. You just got to make sure you don't risk too much of your money on one trade, and you don't blow your account. There's a rule of thumb: 2 to 3% is what I've heard for Forex. Some people even say only 1%. So it just depends how much money you have to trade with. Lower dollar amounts, unfortunately, you're going to have to take a little bit of higher risk in order to grow it. But once you start getting to the 6-figure, 7-figure numbers of trading, then you don't need to risk 3% and 5%. You could risk 1% or fractions of a percent, because you have more money working for you. So as you have more money working for you, you want to reduce the amount of money you put out there in terms of percentages, because you want to protect your equity. All right, so you start out with the daily, and you kind of see, all right, it's been bad, but if you really look at it, from 21, we started 21 here, and we've gone from 30 all the way up to 60. So we've doubled in basically less than a half a year. So if it came back down and it touched it again, it's okay. But it didn't go negative from 21. And right now we're up again. We're up 8,000 off of what we started 21 at. So we're almost up, what is it, a third, 30% from the beginning of the year. So even though you had 100x profit, and you might have gone, 100x, 100% profit, and you gave it all back, you're still up 30%, which is better than any kind of stock market trade, funds. Just realize, how early you are in this. You got to just be able to stomach the volatility. And unfortunately, the market's so small still that manipulation is possible. You don't have big banks. You might have big banks. I'm not really sure who the whales are, but that's what they call them. Again, with Forex, you have trillions of dollars in a day traded, so it's a lot harder to manipulate the Forex market as opposed to market caps on cryptos. Now, one thing I don't hear a lot of people talking about, but with all these big companies, Grayscale and PayPal and all these places buying the Bitcoin, one of the reasons why it might be so volatile is because there's not a lot of volume or not a lot of coins available on these exchanges. So, if the money is held in cold storage and not being traded, that means the availability of the Bitcoin on the exchanges are a lot less. So if there's less supply and higher demand to either buy or sell, that might be why we're seeing such drastic moves in the coin, because the supply is lower. The supply hasn't changed in terms of the coins available, but the available supply on the exchanges could be a lot less because the Grayscales, the MicroStrategy, and those big companies that are buying up all the mined coins every day, there's less and less supply on the exchanges. So when someone comes in and does a big move, that drastic move, again, like I said, might just be because there's not enough supply to allow for allow for the demand or the lack of demand to soak it up in the order books. All right, so anyway, I'm doing a lot of talking, but it's been a while, and just kind of want to get you guys up to date on things and kind of talk through a couple things. So you start out on a daily, you start working your way down. Again, I've thrown some support and resistance lines here based on the charts. Again, when you start seeing things like this, these are ranges. These are not single lines. Like I'm representing them as single lines, but they're all price ranges. So just because I say 59.592 doesn't mean that that's when you should sell your coins. Like if you're looking to get out of a trade, you might want to come in a little bit under. You got to figure out, look, so you got a little range there from there to there. So, this might be 500 point range, on a $50,000 coin. So just remember that. Just because I'm showing this as a single line doesn't mean it's actually a single line when it comes to you setting your trade limits in your trades. So just like everything else, everything's been through such a crazy manipulation up and down. There's really not much to do. All you can kind of look at is the support and resistance line. This right now, this pattern, if it completes in the short term, means that it's going to be bearish. So this pattern is looking for price to come back down to 35, pretty much 35 and a half, right? At this level here to complete. So once it completes, though, it does suggest that it's going to bounce higher. Now, you could do, again, just like I was talking about with ADA, you could play different things. You could play the breakout of this support line. If it breaks through this resistance line and it comes up, it comes up. Oop, that's not what I wanted to do. So if it comes up out of here and bounces down, you might be able to play it up to this level. And again, like I just mentioned, that's not just a specific level, it's a range, right? So you want to make sure you consider this as a range. So you can wait for that breakout, wait for the test, and then, go from 39.5 to 43 basically, or a little bit under 43. So that's a couple thousand. That's like $3,000, I think. Yeah, that basically about $3,000, which is a little bit under 10%. Not a bad trade. But again, right now we are based on this pattern. If we're looking for this pattern to complete, the price action that it's suggesting is that it's going to come down. So it could come down to here, and then maybe it's going to use this support area. So this is resistance because it's above the price action. This is support because it's below price action. And I'm using the brush instead of the pointer. So you bring this down here. So we could see price action come down here to complete the D. And then from there, the anticipation is that it's going to bounce off and go back up. And then there's some intermediate price targets here. That once it comes down here, you get in, and then you're going to get out. So, maybe you get out 25% here, and 25% at the C, which is the peak. Right now this is the double top, right? But it's aimed upwards, which is less. With a double top, it's more prominent if it's facing down, and with a double bottom, it's better if it's facing up. So just keep that in mind. These are M's and W's. So there's an M here, right? You see that? But it's facing upwards, so it's less likely to break down. Now, if this M was like this, that's more likely to break down than up. So you just got to keep that. And there's M's and W's everywhere. Look, here's M and W. M right there. This was facing up, but look, it didn't actually play out. It faked out. So, here's the line where it should have broke. It faked this out. It went up a little bit, and then boom. So this would have been a losing trade if you would have got in at this breakout, because, basically you got to wait to see that it was going to support this line. The fact that it dipped under should have been your signal not to get into the trade. if it would have stayed above here, that would have been a good trade to get into. All right, so let me get rid of some of that. All right, so again, like I said, you got two things you could do. You could wait for the breakout here to check to make sure it's going to stay above and then play it to this level. Or if this pattern's going to complete, you could kind of check to see if it maybe bounces off here and then starts coming down to this target that it's supposed to complete the D on. And then you could play the bounce off of there and get out, at different levels. Like there's a level here, that could be a resistance level, maybe the B, Just like you scale in, you got to scale out, right? And as price is moving higher, move your stop loss up to break even is your first goal. And after break even, in the money. So you follow your money, you follow the price action higher, move your stop loss higher. You follow the short trades lower, you move your stop loss lower to create at least a break even. Your goal is to get your stop loss to your entry, and we call that break even. All right, that's the goal of any trade. At that point, you have a risk-free trade if you could do that. All right, so that's all I see for Bitcoin. Next coin, Ethereum. So Ethereum. If I can get the brush off the way. So for Ethereum, again, we take a step back, go to the 1 day, and this is a heck of a ride, right? Look at that. 21, we started somewhere around 700, and since then we've run all the way up to 4,000. And then we came back down to 1,700, and now we're back up to 2,700. So 700 to 42 is like a 6x. Then we came back down to, say, 2x, and now we're back up to 3x. So even though this is horrible in terms of if you bought here, just realize nothing's changed. If anything, the forks that are coming up with Ethereum for lowering the gas fees and the deflationary aspect of the coin where they're going to burn coins every transaction, those are all good things. And there's such a big development scheme on DeFi and NFTs on Ethereum. There's enough room for Ethereum and Cardano to simultaneously thrive. There's enough money out there. So longer term, the miners might hurt a little bit on Ethereum because the gas fees are going to go lower and they're going to make less profits. But for the small trader, that's going to allow the average person to get into and get out of trades a lot easier. And, for a $100 trade, you won't be spending $40 in fees. So for the person that doesn't have millions of dollars or hundreds of thousands of dollars or even $10,000 to trade, it's kind of kept them out of the market of trading. I mean, you can buy and hold, but if you buy for $100, you have to make $40 just to break even if you want to sell. So that's 40% just to cover the fees right now. So when the fees get lower and layer 2 solutions really start helping with the gas fees, it'll allow more trading to happen. But for now, if you're interested in Ethereum, just buy and hold, and avoid all the in and out fees. But if you do have the funds and you're able to do the trading, let's take a look at what's here. So this is on the daily. Like I said, it's been a horrible pullback, but again, we're still up right now. We're still up 3x from the beginning of the year. Just in a couple days, we've gone up 30%. So it's been a great rebound. It was a horrible dip, but we're licking our wounds and we're moving forward. So let's drop down to the 4 hour. Again, 4 hour, really all we have right now are support and resistance lines. That's all we can really play here. There's nothing else really going on. There's no obvious patterns that I see here. So right now it looks like it might have broke through this level, and you could possibly play some of these levels up here as a target if you're interested in getting involved with a trade. I personally would kind of wait to just see where we are and start seeing the stability. There's a lot of lines here. It's kind of hard to say. I mean, you could play the momentum run that it broke through here, that'll go to here, but again, you got some stuff going on here, you got some stuff going on here. So there's a lot of levels here at the 1 hour time frame that you have to worry about. Maybe on the 4 hour you got a little bit more to go with, but even here you got this range. This is really a range. So right now, really at the 4 hour, we're still in the resistance area. So we really haven't broken out yet. So really, there's an area right there. So we're right in the resistance level here, because you got stuff going on there, you got stuff going on here. So this is really a range, like I said. So once it breaks through there, then you got this level to worry about, then you got a level here to worry about. So you got a lot of noise, and there's nothing really clearly saying, other than the momentum of everyone coming back in the markets after this crazy pull down. I mean, you could play the fib possibly, like if you the reverse fib, right? If you take it from here, come down to here, a lot of times price will go to the 0.5, 0.55, levels. So there is some room up here. It kind of matches up a little bit with this support line right in the middle of the two. And then also you got the 6.5, so you could play the reverse fib. This is a negative fib, because right here at the 382, if it rejects, then algorithms are written to, if it comes back down off of here, they're gonna try and push down here, the algorithms, but you could see, once it starts breaking through here and breaking through the 6.5, once it breaks 6.5, it's a higher probability that it's going to keep going higher. So right now, this is still a possibility that it can go down here. There could be more manipulation coming in. That's unfortunately the reality of our markets right now. So personally, I wouldn't do anything with this right now. There's nothing, too much noise, too many support and resistance line. We're just getting through all this manipulation nonsense. So again, like I said, personally, I would just be watching this for next couple days to a week to get this to be kind of, get the noise out, let it go into like a steady state, and let price action start developing non-manipulation situations. Unfortunately, that might not be the case. I mean, it seems like every week there's people manipulating, and that's unfortunately, you just got to make sure you're on the right side of the manipulation. Alright, so that's it for Ethereum. Finally, Chainlink. If you go out to the daily. Why do I always do that? If you start January, look, we're down in the 11s. We went to 50, so that's basically 5x, and we came down to 15. So even 11 to 15, that's still a 50% gain. And right now we're up 26. So we started 21 at say 11, and we're at 26. So we're pretty much almost 2.5x, right? So we're still doing okay. Let's check here. I'm just kind of curious. Let's check to see what this fib level is. Yeah, it's pretty deep. Let's go to the weekly for the heck of it. Let's see what the weekly looks like. Yeah, this really came down deep. I mean, it went down past the 786. But it held, so, right now in this longer term fib level, if it's bouncing off, algos are written to come up here, so we could see the price come back up to here based on these algos, based on these pivots. There's an algo that's written to take it up to here. It's going to try its best to get there. So let's drive down lower. Again, I put some resistance levels here based on what I'm seeing here. Again, when they're close like this, just consider these as ranges. There's a lot of range in this. So there's a big range there, there's a range here, and there's a range here. And of course, there's ranges on these single lines as well. I mean, look at this big wick. So, I mean, if you really come back here, you can see that it started from there, went all the way down to here. You know, so it's a big range. It's a big range, and you know, when you start putting those all on here, you start seeing there's not a lot of room in between to get trades to actually make enough percentages, unless you're going to use leverage. All right, let's drop down to the 4 hour. All right, so again, right now, this pattern is not completed. For it to complete, we expect price action to come up to here, so basically like 37.7. Once that happens, though, this turns into a bearish price action. So right now it's breaking out of these levels. You know, you could play price action up, hoping that it goes up to here, or you could wait, see if it comes back down. You know, when it comes back down, then you're going to look for levels of bouncing, and then you might want to take the retrace. So, you know, again, it's always hard to say what's happening here. This is just straight up. So you have to wait for price action to kind of stall a little bit, maybe come back down. Like right now, one of the things you could do is this. Here's a range, right? So if price action comes up here, it comes back down, checks, and then comes back up, you can get into a trade down here. But until you see that retrace and support level being held, this is a very dangerous bet. So you don't know, like, what goes up must come down, but you don't know where it's going to come down. Right now, you know, right now it could come down to here, right? But we're hoping that it's going to bounce in between these two levels maybe and create a support line here. Then you could get into the next trade. And then again, there's levels everywhere, which makes this very hard for a trade, because you got another range right here, right? Got another range up here. And finally up here you got the range, you know. And then finally that algo target that we talked about. So, it's like I said, we're still kind of, I mean, actually right here, if this actually plays out the way it's shown it might play out, if it does bounce down like that, look, we got a nice head and shoulders here. So if it actually does come back down and checks this level, this is going to be the right shoulder. And if that's the case, then what you're going to do is you're going to take the breakout from the neckline, which will be up here. This will be the neckline. You're going to measure from here to the bottom of the head, right? This is just an estimate. So let's just draw a quick little line here. Let's just draw a line from, say, here to here. So if this breaks out the neckline, then we're looking at, you know, hitting this this range up here. So this is what I would do. I would wait for this to come back down, form the right shoulder, and once it breaks the neckline after forming the right shoulder, I would play the breakout up to this level, up to this basically X. So you're looking at 44.75. You'd be getting in somewhere around 30. No, I'm sorry. You'd be getting in. Where's the neckline? Yeah, this would be the neckline. So you'd be getting in basically at, say, 31, and you can get out. You know, you could take some profits at maybe 38, take some more profits at maybe 43, and then leave the rest to run even higher to these other targets. So I would wait for this inverse head and shoulders to play out. In addition to, so this shoulder might be completed before the D hits. So you might see this come back down and then form the shoulder and then hit the D. So, you know, once this neckline is broken, maybe your first target to take some profits is at the D level, then another set of targets here to take more profits, and then up here. Again, like I said many times, as you start getting in the money, start moving your stop loss to break even, and then as it goes even further, put in a little bit of profit. You can't go wrong with proper risk management. So again, I hope you enjoyed the video. Just remember There'll always be another trade. Most people look for reasons to get in a trade. You also want to look for reasons not to get into a trade. Just because you're looking to make money, you can think of it as, if you avoided a bad decision to get into a trade that you didn't feel 100% about, you didn't lose money. So by not losing money, in reality, you made money, right? So again, don't chase a trade. There's always going to be the next trade. There's so many different charts. These are only 4 of thousands of cryptos. I have at least 16 of them that I have set up here. I'm only going through the 4 today. I'll try to do another 4 tomorrow. But again, just three or four big things you need to do. First of all, do the analysis on the chart. Come up with your trading plan. When to get in, why to get in, when to get out, how to get in. Are you going to buy 20%, 20%, 20%, 20% and ladder yourself in? Are you going to wait for certain fib levels to get in? And then before you even do the trade, know when you're going to get out. So look at the resistance levels. Say, okay, I'm going to take 25% off the table when it hits this level, another 25% when it hits this level. I'm going to move my stop loss in the money, and I'm going to let the rest run. So if it hits the stop loss, I still made some money and I lost nothing. So you got to do all that, and you got to stick to it. Don't let greed get you. Don't try to make fast money. Consistency here and compounding effect are going to take effect. You don't have to make a home run on every trade. Those home runs will come just by allowing you, like, take 25% off, take 25% off. You have that 50% there, and if something crazy happens and it goes up $1,000 or whatever, you might have hit that home run, but you also played proper risk management and you don't blow your account. You can't make money if you don't have an account. You got to protect your equity. And like I told you just a few seconds ago, you got to find reasons not to take the trade. Not always, you don't always look to take the trade. You look to not take the trade for some reason. And you got to keep abreast on FUD. Unfortunately, in the crypto market, manipulation comes into play. And that's a more important reason to always make sure you have a stop loss. Know how much percent of your equity, like say you have $10,000 account, you want to risk 5%. So what's that? That's $500, right? You have to set your stop loss. That worst case scenario, if things go bad on that single trade, you're only going to lose $500. And if manipulation comes in, hopefully you have your, you set your dues, buys and sells with limits in case you can't get into the exchange. Your order is already placed. So if you're looking to get out, set your initial 25% for your out. Have your stop loss in there so that if crap hits the fan and you're not able to get in to do anything with your account, your trades are already there for the market to execute. And unfortunately, slippage and gapping happens, but hopefully the buys and the sells and the stop losses will trigger when they should trigger and get you out of the trade when they should get you out of the trade, and you don't lose more than you expect to lose. But with the crazy moves that we've seen, is always that chance that you could even still lose more than you thought you would lose because of slippage and because of outages and stuff that happens with the exchanges that shouldn't be happening. They've had more than enough time to fix these exchanges. I don't understand, to this day, I don't understand why we have exchange outings. I really don't. I think it's something that should have been fixed a long time ago. They've had these problems for years. It's not the first time they're seeing these problems, and I just don't understand it. If anyone knows the reason why they don't seem to be able to fix it, unless it's like they just shut it down and stop them from having a workload, or I don't know. I just don't know, and it's frustrating to see people not being able to get in. That's why you need to have multiple exchanges. For the most part, you want to probably keep your cryptos on wallets that you can control. I think like Exodus will allow you to do swapping between coins, so there's a chance you may not even have to log into an exchange if you wanted to go from say Cardano to USDT. you might be able to do that within the wallet without even worrying about logging into a website. So unfortunately, we're all at the mercy of the exchanges, and just use proper risk management. Set your buy limits, set your sell limits, set your stop loss, just in case if things go crazy and you can't get into the exchange, your pre-planned sells and your pre-planned stop losses will kick in without you even having to log in. All right, guys, take care. Please, like I said, subscribe to my channel, like, share. Let's build this channel up to 2,000. When we do, we'll be giving some crypto away. And really, I want to grow this with people that want to be here. So if you like this and you want to see more, please consider subscribing and staying in touch by clicking the little bell. You'll get notified when I put out a new video. I'll be putting out another video a little bit later this evening, and look forward to that. And until next time, I'll talk to you guys soon.